Shopify is one of the strongest long-term e-commerce platforms in the market, but the big question for investors now is whether its rapid growth can continue while the company expands into AI-powered and agentic commerce. Shopify just delivered an exceptional second quarter of 2026, with revenue growing 34%, GMV growing 32%, gross profit growing more than 30%, and free cash flow also growing more than 30%. Management is guiding for another low 30% revenue growth rate in third quarter, which suggests that the recent acceleration is not simply a one-quarter event. Shopify provides an integrated commerce platform that allows businesses to create online stores, manage products and inventory, process payments, market to customers, sell through social channels, operate physical stores through Shopify POS, and increasingly use artificial intelligence to manage their businesses. The company serves millions of merchants across more than 175 countries. Shopify's business model has two major revenue streams: subscription solutions and merchant solutions. Merchant solutions includes payments and other commerce-related services, meaning Shopify can generate more revenue as its merchants sell more. Shopify's second quarter of 2026 was arguably the most important quarter for the stock this year. Revenue reached approximately $3.58 billion, representing 34% year-over-year growth. GMV reached approximately $115.57 billion, up 32%. Adjusted earnings per share came in at approximately 42 cents, while free cash flow margin reached 18%. This is important because Shopify is no longer simply a high-growth company. It is demonstrating that it can grow rapidly while simultaneously generating substantial cash. Shopify generated approximately $11.6 billion of revenue in 2025, representing 30% annual growth. The first quarter and second quarter 2026 results indicate that growth has remained around the mid-30% range. If Shopify can maintain growth above 30% for another year or two, the revenue base could expand dramatically. My base case assumption is that 2026 revenue could reach roughly $15.5 to $15.8 billion, followed by approximately $19.5 to $20.5 billion in 2027. These are estimates rather than company guidance. GMV is one of the most important numbers to watch with Shopify because it represents the value of merchandise sold through the platform. Shopify facilitated approximately $378.4 billion of GMV in 2025, up 29%. In second quarter 2026 alone, GMV reached approximately $115.57 billion, up 32%. When GMV grows rapidly, Shopify has more opportunities to generate payment, transaction, lending, advertising, and other merchant services revenue. The biggest structural advantage in Shopify's business model is that revenue can grow faster than the number of merchants because Shopify monetizes merchant activity. Subscription revenue provides recurring income, but merchant solutions can scale with GMV. In second quarter, merchant solutions revenue grew approximately 37%, faster than total company revenue. That demonstrates why payments and other commerce services are becoming increasingly important to the overall Shopify story. This is where Shopify's investment story has changed considerably. In 2025, Shopify generated approximately $2 billion of free cash flow and achieved a 17% full-year free cash flow margin. In second quarter 2026, the free cash flow margin reached 18%. Management expects third quarter free cash flow margin to remain in the high teens to low 20% range. That combination of 30% plus revenue growth and high teens cash margins is extremely attractive if Shopify can sustain it. AI is one of the most interesting parts of the Shopify story. Investors previously worried that artificial intelligence could make traditional e-commerce platforms less important. Shopify's latest results are suggesting almost the opposite. AI could actually increase the number of merchants using Shopify and make the platform more valuable. Shopify is integrating AI into merchant workflows through products such as Sidekick, while also partnering with major technology companies. Sidekick's daily active users increased 3.6 times year over year, according to Reuters. The longer-term opportunity may be even bigger than traditional e-commerce. As AI agents increasingly search for products, compare prices, and potentially complete purchases, merchants will need infrastructure that can handle these transactions. Shopify is positioning itself as the commerce infrastructure underneath this emerging agentic commerce ecosystem. If this strategy works, Shopify could benefit even when consumers discover products through AI rather than traditional search engines or social media feeds. Shopify itself describes building the foundation for the future of agentic commerce as one of its strategic priorities. Shopify is also moving beyond small businesses. Shopify Plus allows larger merchants to use Shopify's infrastructure while receiving more advanced functionality and support. This expands Shopify's total addressable market and creates opportunities to increase revenue per merchant. The enterprise opportunity is particularly important because larger merchants can generate significant GMV and payments volume, while also strengthening Shopify's brand credibility. Shopify's balance sheet is another major strength. At the end of 2025, the company had approximately $15.2 billion of total assets and approximately $13.5 billion of shareholders' equity. Shopify also has significant investments and cash resources, while its previous convertible senior notes shown in the 2025 balance sheet had been eliminated from current liabilities. This gives management considerable flexibility to invest in technology, acquisitions, product development, and shareholder returns. Shopify is increasingly returning capital to shareholders. In June 2026, the company announced an additional $3 billion of authorization for share repurchases, bringing the aggregate authorization to $5 billion. Shopify had already repurchased approximately $1.45 billion under the authorization as of June 1st. If the company continues generating substantial free cash flow and buys shares when valuation becomes attractive, buybacks could provide another source of per-share earnings growth. Shopify's competitive advantage comes from its ecosystem, rather than one individual product. Merchants can combine storefronts, payments, POS, marketing, analytics, fulfillment integrations, apps, and other services within one platform. The ecosystem creates switching costs because merchants increasingly depend on Shopify for multiple aspects of their operations. The company's scale also gives it more resources to invest in AI and product development. Shopify currently says its merchants operate across more than 175 countries, and that its platform has facilitated approximately $1.6 trillion in cumulative GMV. The biggest risk is valuation. A company growing at 30% or more can justify a premium valuation. But if revenue growth falls toward the low 20% range while the stock continues trading at a premium multiple, the downside could be significant. Competition is another risk, particularly from Amazon, payment companies, social commerce platforms, and emerging AI-native commerce tools. There is also the possibility that AI lowers barriers to building online stores and increases competitive pressure. One recent bearish analyst view specifically highlighted potential competition from Meta's AI commerce initiatives. For my model, I estimate Shopify could generate approximately $15.5 to $15.8 billion of revenue in 2026. This assumes growth remains around the low to mid 30% range for the year. The second quarter performance and third quarter guidance support this type of trajectory, although Shopify has not provided full-year revenue guidance. For 2027, my base case assumes revenue of approximately $19.5 to $20.5 billion. That would represent roughly 25% to 30% growth from my estimated 2026 level. I would consider this a reasonable assumption because Shopify should benefit from increasing payments penetration, enterprise expansion, international growth, AI-powered commerce, and continued GMV growth. The earnings story could become even more powerful than the revenue story. As Shopify scales, operating leverage can allow profits and free cash flow to grow faster than revenue. The company's second quarter results already showed this operating leverage, with free cash flow margin reaching 18%. If Shopify can move toward a sustainable 20% or higher free cash flow margin over time, The company's intrinsic value could increase substantially, even if revenue growth gradually slows. Using a long-term discounted cash flow framework, I would assume approximately 25% to 30% revenue growth initially, gradually declining toward the mid to high teens over the following years. I would use expanding free cash flow margins, reflecting Shopify's increasing operating leverage, followed by a more conservative terminal growth rate. Under these assumptions, I estimate a reasonable intrinsic value range of approximately $145 to $175 per share. Because Shopify is a high-growth company, small changes in the discount rate, terminal growth, and margin assumptions can produce very different valuations. In my bear case, Shopify's growth slows much faster than expected, competition from AI-native commerce platforms increases, merchant acquisition becomes more expensive, and valuation multiples compress. Under that scenario, I would place the 2027 valuation around $105 to $125 per share. This scenario does not mean Shopify becomes a bad company. It means the stock could underperform because investors pay less for each dollar of future cash flow. My base case assumes Shopify continues growing revenue at a strong pace. GMV remains above 20% growth. Merchant Solutions continues outperforming subscription solutions. AI increases merchant engagement, and free cash flow margins gradually move toward 20%. Under these assumptions, my 2027 price target is approximately $175 per share. In the bull case, Shopify maintains 30% plus growth for longer. AI becomes a major commerce catalyst. Enterprise adoption accelerates, payments penetration increases, and free cash flow margins expand significantly. Under that scenario, I believe Shopify could potentially reach $210 to $230 per share during 2027. The extreme bull case would require Shopify to become one of the dominant infrastructure platforms for AI-driven commerce. If revenue approaches or exceeds $21 billion in 2027, free cash flow margins expand toward the low 20% range, and investors continue assigning a premium growth multiple. The stock could potentially reach $250 plus. This is a high-risk, high-expectation scenario rather than my base forecast. My 2027 Shopify valuation looks like this. Bear case, $105 to $125. Base case, $175. Bull case, $210 to $230. Extreme bull case, $250 plus. Following the latest earnings reaction, Shopify shares were trading around the mid-140s in early August, meaning the base case still represents meaningful upside, while the bull case offers considerably more. Recent Wall Street targets have also moved higher following the second quarter results, although analyst opinions remain divided. My overall rating for Shopify is buy for long-term investors, but with valuation discipline. The reason is simple. Shopify has demonstrated 30% plus growth, rapidly expanding GMV, strong free cash flow, a powerful merchant ecosystem, growing enterprise adoption, and potentially transformational AI opportunities. However, investors should remember that this is not a low-risk value stock. If growth disappoints, Shopify's premium valuation can create substantial volatility. Shopify is no longer just a bet on traditional e-commerce. It is becoming a broader commerce infrastructure company with payments, enterprise commerce, physical retail, AI tools, and potentially agentic commerce, all contributing to the long-term opportunity. The second quarter 2026 results significantly strengthened the bull case because Shopify delivered more than 30% growth across GMV, revenue, gross profit, and free cash flow, while guiding for another low 30% revenue growth quarter. For 2027, my base case target is $175, my bull case target is $210 to $230, and my extreme bull target is $250 plus. The biggest question is not whether Shopify has a strong business. It clearly does. The question is how much of that future growth is already reflected in the stock price. For long-term investors who believe Shopify can remain one of the leading global commerce platforms, While successfully adapting to AI, I believe SHOP remains one of the more compelling growth stocks to watch through 2027. So, what do you think about Shopify at these levels? Is SHOP heading toward $175, $200, or even $250 plus by 2027? Or is the current valuation already pricing in too much future growth? Let me know your Shopify price target in the comments. And if you found this analysis useful, make sure to like the video, subscribe to the channel, and turn on notifications for more in-depth stock analysis.